Hello friends and traders, welcome back to chart of NVDA. There are a dominant banking bars, 5 on the bearish side on a daily chart of NVDA, and there are 3 major bullish banking bars. So what we're going to do, we're going to place our structures, overlay on the price, and find out the super targets. So we are using 1, 2, 3, 4 different indicators together to bring a story which can stick. Right here is the beginning, and this is the end of the bar where we have placed this Tesla square model. What are we expecting? Market is going to be reacting to these bigger squares and inner squares. It did react to this one and it went up here. Alright, now it is reacting. So these levels on the right side, the price levels, are coming from that scenario. You can put these price levels on your chart and use your methodology at hand. And if you like these levels and your method comes together, you can contact your broker to set up some trades for you. Alright, so this is what the scenario is showing up here on this. Now let's look at the second part of it, which is, you see here there's a gray line here and there's a gray line here. It is placed here. Let's test this line first. I'll put it here way in the bottom. Okay. Alright, so let's see. So why I'm trying to move this, I'm trying to test the frequency hits first. Always I try to see the frequencies are hitting based on this scenario or not. And if it is missing, how much it is missing. So I'm curve fitting all the time. Okay. So if I place it here on the top, if we're projecting this market is going to go here and bounce from there. Okay, let's move it over here. It says market is going to go here and move from here. That's what it is telling us, right? Giving us the area in advance, swing by swing. Now this is another swing. Okay, so this is another one. So this one is interesting. Why? Because we see it is reflecting the top, and you see here the gray at the bottom. This is what we are trying to see, right? How market is reacting. Well, you can see this is a flag pattern. All those technical stories. Alright, so from here we got this bullish move. If I put some zigzag, you can see this is the war between buyers and sellers, and finally they took off. This is the initiation of a new swing, and you see it is going in this area, working out decently. So if I put it here, this is what we are trying to do. If I put it here, you can see this one is respecting the structure, right? Thus we are trying to figure out the structure. If I put it here, This, you see what's happened here is apex coming up here. You can see this very clearly. Let's do it if you don't see it. The apex broke from this swing. If I put it here, it went to this gray area right here to the tick and came down. Twice came down. And then this red bar is sitting here, which is reflecting from here, right? So if I put it here, I can see the bottom, top, reflections and top. They're all like a very good spot. So that is what you do. When you see this new initiations from here, new initiations from here, you place this, you see the and then I think the right placement is the frequency days, where we if you watch the Apple video how we do it. All right. So if you put it here at this point, I want to see some hits. Where do we put it now? Right? I put it on the top. Let's see how it behaved. So I typically putting it here. The gray area is right here. And this gray area, we can see the market is at 117. So I see there's an overlapping Tesla square matching with this EMF frequency generator. Now this is a 369 frequency generator. One thing is missing in this input is finding NVDA frequency and attaching that. And we cannot do that in public for obvious reasons. So we just stick with 369. Alright, so if we do this, so we see this area looks hot. If it takes a dump, we just mark it. And this is what we do. We've been doing it for, as a team, we have come together, we're doing it for a while. And if I do this here and see the rotational metrics, it goes to the top, where this one is sitting 163. And what's going on here, 150 white is stopping on 150, because if you look at the buy side PE ratio, hedge funds, they already been talking about we are projecting target of 150 for this year, right? So that was last year. That's what they did. They're holding it. They gang up together, come with a philosophy, why not 160, right? Anyway, so there's the mathematical model based on the pricing models, based on hedge fund buy side models. There's a sell side models, there's a LBO models, leverage pivot models. So you're looking at the financials of the company, 100 things together, and making judgment, do you want to buy here? And then after a certain point, the valuation shifts. That's how they make the targets. Maybe next year or maybe a few months down the line, we might bring that into public space. But right here, you got it. Okay, so we have qualified these two targets. Now if you put it on the top, this one is still there because the stop is same, so it doesn't make any sense to do it. This bottom is going to be almost the same. We already have that. Doesn't make sense to do it. All right, so this is, I think, just use this. If I put it at this intermediate section, this is coming up to be here, and this one is coming down to be here. So let's say we want to do this somewhere. This is close to this guy, so we just say this is the area, right? We're looking at. Let's put it here. Okay. So this is how we mark the prices. Ranges, right? Ranges. All right. So okay, so I think you got the idea. We have a pricing phenomena. So what's going to happen? It will break this out here and here on the top. Let me put the top also. So if you have to put a trade, we have to do something about it, right? We have to take some bias. We have to hedge it. But remember, they will do this to steal the option premium overnight when the news comes out. So we need to get into the compressed state. So now let's talk about the oscillations. Now this is the oscillation tracker. This is a good profound entry tracking trading system, and on the bottom we have the contract tracker, which we have seen before. So what do we do here? Well, let's see. We are looking for, we know this is the area from here. We have seen through a lot of things. This is a market maker level. Let's get to the business, right? This is a market maker level. We can project it if you like, but here it is. I just placed it right here. Trend line, forecast, market maker level. Big, fat, juicy area to go long. All right, perfect. Now what is really going on here? We know this market maker levels for all tops and bottoms. So let's talk about this oscillator. When it goes below these two yellow lines, everything's compressed. It happened here, it happened here. Buy zone. Look at this contract. All the sellers have crushed it. Now they are settling down, right? We're talking about multi-year movements. We're not talking about the next 5 days, 10 days. When we have, let's say you want to buy 1,000 shares, and you have a portfolio margin, and you have hedged it, you're risking no more than $5,000 to make 10x. That's how it is. So this is how you can structure your trades tactically, and obviously be seduced by the volatility. VIX 9 months, 3 months, 12 months, and so you can bias that way as well. This also, VIX is a generic market. There's also volatility for each market as well. Again, this is NVDA. This was a panic move after the split, and there it is. Algo is doing all this, right? So this is where they are buying it. And this is what we did as well. All right, so go back and check your prints. So there it is, right? It break, retest, happens again at the level. Now this is all coming from this DNA structure. Why this DNA structure? Remember, the philosophy of 3, 6, 9 is pretty straightforward. A pivot is a pivot when it has a banking bar in it. Swing is a great swing if it has a banking bar in it. We do things very simply. Alright, this is the market maker tool. We have placed it here. In the genetic, same logic I explained. Banking bar, we have this structure. Break and retest and failure. Because we don't have this break here, so I have to place it here. So what's going on happen here? This is your market maker levels right here. And they are extension of these levels. They are also matching there. Sorry. Alright, so we have this okay, so now look at this oscillator. Let's finish this, wrap it up. You see these levels? Buy zones, buy levels, buy levels, buys. Good buys is, I want these preferred all three inside this. If not, this is not a good trade because they're already in there. This was a short. We know this, right? So this is where we are. It is right again, as we have seen before. Unless they get in panic in one side or the other, there's no edge. There's no edge. Remember that. Okay. Now this is on the remember, this is activated by the buy side hedge fund phenomena. So I'm looking more on a buy side, buy side, buy side, buy side. Okay. All right, and then on the bottom rotations, when we are, you see there's like two gray lines here. We can probably look at two gray lines. Once same logic happens, when you are, and now this is just a Bollinger Band of rotation that's telling us when we are. Now it may take a while, like here it took a while, oops, it took a while to collect the contracts. Remember, it's all about inventory collections right here, right here, right here. So here, if you got it excited early, you may have to try it 1 time, 2 time, 3 time. That's why when we get in those panic situations, you better be hedged, especially if news is coming next week and you want to play that, or you have to play lowest volatility hedged scenario. You can hedge on one side, 2 sides, or you can create a mutex hedges. Again, that is option tricks we play, and we get 40% out of it, 50% out of it, sometimes 100% out of it, and we exit. The strategy is just designed to just do that, right? Okay. So this is again a buy-side program. So this is what we are looking at, sophisticated ways to doing things. And here are the levels for NVDA, my friends. And see how you play these and what is the game plan. Let me mark these. At least let me mark the squares. All right. Thank you so much.